I think it's going to go from strength to strength to strength. Do I see the rental market doing well? I think both can do equally well, and both can do equally badly in the wrong market. My name is David Siddons, and I have been analyzing and predicting Miami real estate movements for the last 2 decades. This is our introduction to the 2024 forecast. This will cover predictions, trends, analysis, and fundamentally what we see going on with the market. As always, if you want more information, give me a call, shoot me an email. What I'm going to do right now is I'm going to outline what we're actually going to see for this year and why it matters. We're not going to go too deep, but fundamentally we're going to look at 10 key points, and then we're going to dig into those points as we go through the year, track them, watch them, and understand what's going on as it evolves. That is the fundamentals. Now let's get into it. As mentioned, I've been successfully analyzing and predicting Miami real estate patterns, both in the condo market and the housing market, for well over a decade. And if you go back and read our previous reports, you can see that we got it right more than we got it wrong. This year, different to what we normally do, where we churn out these big reports and we look at neighborhood by neighborhood, price point by price point, and product by product, we actually now have the tools live online, feeding you the data as it comes into the system, telling you months of inventory, telling you dollar per square foot, showing you what's transacted, and showing you the directional trends, whether it's a buyer's market or a seller's market within the data that's live feeding you. So we don't need any more to produce these large reports. What we want to do is drill into the specifics of what's going on. And right now, there's one thing that is overruling and governing everything around us and really controlling and really part of the main narrative of what 2024 means for real estate in Miami. And that is the real estate paradox. Let me explain. The real estate paradox is a situation where you've got a standoff in a market where markets aren't moving, and you have conflicting psychologies working against each other in the market, which can create some friction. In this case, we are dealing with buyers who don't feel the extreme need to buy in some cases, and sellers, ironically, who don't feel the need to sell. That is a paradox. And how can that happen? I'm going to bring up on the screen here a visual that represents and explains the whole market. And I'm going to urge you to actually read the associated blog with this particular report, this quick 10-15 minute segment, to help you understand it. Once you do, everything will fall into play. But fundamentally, you've got 3 brackets. You've got initial buyers, and then you've got sellers who are also buyers moving into the higher bracket, and the higher bracket coming to downsize. That is the cycle, the money in the washing machine going round, and all these plays come together in this one big table. With that said, there are specifics happening within each and every observation, trend, and prediction that we've got. And all of those play into this one big system. And we're going to dive into each one of those very, very quickly. And through the year, we're actually going to be running podcasts with experts in those areas. We are going to be covering the expert within the luxury sector who's just dealing with ultra luxury. We will be dealing with the economist who understands the interest rates and the economic patterns. We will be dealing with openly the expert in the financial markets who understands and really sees what's going on with things like the CDs, which are the short-term bonds, which is where so much of the money and liquidity is being held up right now, plus interviews with so many other experts, including experts within condo market, experts in new construction, and many other professionals who understand the city of Miami, both in terms of its function, its growth, and its operation. Here are the 10 points. Number 1, big question, are there going to be better deals in 2024? One of the things that people say to me all the time is, I'm looking for a deal. Well, to get a deal, you've got to assume that someone is going to be willing to sell below market. The reality is that means someone in distress. Make no mistake, most of the money sitting in the system right now with people who own are not under distress. They're not short selling, they're not foreclosing, they don't need to sell, they're quite comfortable, and they're certainly under no economic pressure to liquidate and get out of their asset. you really need to understand that there are not going to be any quote unquote deals. There is no crash, the wheels are falling off. People keep referencing 2007. Forget it, it's not going to happen. I do predict that this market is not going to crash. It's stable. That's the first thing you need to understand. Now, getting that out of the way, let's move on to point number 2. Is Miami overvalued? Well, if you actually look at a lot of the data that's coming out from Q3 and Q4 against sold data with active listings, yes, there is. I know it's not cool to say this and probably not very trendy, and people will say it's not overvalued, but the reality is, yes, there is product that's overvalued. And it's overvalued because in the grand scheme of things, again, looking at that big table, there are sellers who don't need to sell. They're actually not selling and leaving Miami. No one's leaving, attrition rates are less than 1%, they're looking to move up to the next more expensive product. And that means if I sell high, I have to buy high. Yes, there are overvalued products, but what they're doing is they're listing high because they're not that motivated. But now in Q1, we are seeing reductions. We're seeing prices come down a little bit because those sellers are getting a little bit more real, and honestly, they have to. Point number 3, which market's going to do better? The housing market or the condo market? Wish it was that simple. Obviously, it's not. What I can tell you is that migration is systematically affecting both houses and condos. But what's it really affecting? It's affecting the primary buyers because these relocations are buying. Now, new homes, prime locations, still hard to come by. Why? Because there's not that many of them. So will they do better? I don't know, it's hard to say. But what I can tell you is the new construction market's doing really rather well at the very, very luxury sector. And in certain sectors, I'm actually seeing in condo markets a severe lack of inventory. Good example, Coconut Grove, high expensive product. We are actually now just representing our 25th sale at Park Grove, and units are selling very, very quickly in that product. And there's good reason why. How they'll do better, condos or houses, it really doesn't matter. What matters is the neighborhood and the price point that you're looking at. I think both can do equally well and both can do equally badly in the wrong market. Point number 4, are there any specific neighborhoods that we see the major corrections in, any areas where we see bigger corrections? Well, the truth is yes and no. Once again, what I do see, more importantly, is price points. I think that the very, very, very high end of the market, that $10 million plus, is actually where I see things doing not as well in some cases, because the differential between the asking price and the selling price right now is huge. It's much greater than 10%, and I think until we see corrections like that, we're actually going to see more inventory, and I think it won't do as well. But I've always said that the primary markets will outperform secondary markets. And the primary markets like Coconut Grove and Coral Gables and Pinecrest, and certainly other parts of the beach where people are living all year round in that product, will continue to do well. Why? Mass migration. That's it. Point number 5, price point. Miami is not a cheap city anymore. I realize that many people coming in get sticker shock. And again, we understand and predict as people move through, and the trends and patterns that we see is that Miami is getting more expensive. It's less affordable in areas. So the desire for more affordable product, it's still out there. Product that's moving in the 1 to 2 range is still moving really, really well. And I predict and forecast that it will still move well in 2024. If it's moving this well now with interest rates where they are, imagine how it will be when those interest rates drop down by a point and a half, if it drops. But I think it will, and I think that will accelerate. So I expect by Q3, single family price points, 1 to 2, big jump, considerable. Let's see if that happens. Point number 6, continued migration. As it was put to someone earlier on, actually in the year, an agent made a good observation, which I saw online, which stated, Miami is under mass migration. There is 176 companies moving into South Florida, but guess what? Very few of them have actually made the move. Now, that does not mean that they're not moving. That doesn't mean that people are changing their mind. What it means is those moves haven't happened yet. And when they do, that will accelerate things considerably. We believe and know that this is going to happen. These moves are happening. They're already underway. But the real mass of them has not fully started yet. It's not fully initialized. Why? Because these commercial buildings that will house these big companies aren't built yet, not fully, the gravity and the settling of the businesses aren't fully here. But it's coming, it's happening, and that gives us a lot of confidence as we move through 2024. Number 7, Miami will continue to have some growing pains in the process of expanding as a city. That is an ugly truth. It's a reality that we have to deal with, much like when we see kids grow up, they go through growing pains, as does the city. The freeways are expanding, the streets are getting more congested, and obviously you have to adjust infrastructure to deal with this new population growth. There are challenges along with schools. There's a lack of availability. That's not going to change. The one fact that we know that will continue is that people are not leaving Miami. The attrition rate is less than 1%. That means the money's not leaving the washing machine. It's staying in here. So no one's going anywhere. That cannot result in any form of collapse. That cannot result in any form of big correction below what the sales prices have been in the last year. So do we expect to see corrections because of that? Absolutely not. No way. The migration will continue. The adjustments will be required. It will take some time. But in the long run, Miami over the next 5 years, I think is going to go from strength to strength to strength. Number 8, how is the rental market going to perform? Will we see rental market cool down? Well, again, migration continues, people moving in, but there are neighborhoods that require balance and stability, and prices are balanced in accordance with the rental returns. Now, things are more expensive. I mentioned sticker shock earlier on. I think that prices have to stabilize with the rental market. I do not predict them making big jumps. I actually see in some cases them being corrected a little bit. Why would that happen? Well, in a way, it's good because it actually is a result of more migration into the purchases. There are a lot of renters who in the last year have been renting properties while they figure out where they want to live. Part of that migration conversation. And I think we will see a move from those rental to those purchase products that have happened from the people who moved into Miami last year, and there was thousands and thousands of relocating families who moved in, they didn't buy, they rented. That will move into the buying market. So, do I see the rental market doing well? I see it so-so. And that's one of my predictions. Number 9, and probably maybe the biggest and most significant, interest rates. We do predict, and I do foresee, and I don't work for the Fed, that there will be potential interest rate drops coming through the year. And that's going to have a systematic effect on our system. As much as the system works in one way and things spiral up, it can go the other way just as quickly. In this case, this is going to be a positive impact. And we will have on the podcast show an expert in the financial markets and help us understand what we see with interest rates and what goes on around it. And very importantly, the CDs, the short-term bonds that are yielding high returns right now, we see, and many predict, there will be a lot of cash coming into the system. Combined with lower interest rates, it will make real estate that much more desirable. Of course, we're in an election year, and what do we want to see in an election year? If you're in government, you want to see a positive real estate market, because that looks good for you when you're trying to get elected. So don't be surprised if we see some major movements through Q3 of this year. And again, there's going to be a lot of narrative. There's going to be a lot of half-baked ideas of people who don't actually understand the real estate market. But interest rates, undeniably important. Things are changing, and I predict it's going to bring a significant boost into our market by Q3. And that leads me to guide clients to say, marry the house, date the mortgage. If you're looking right now, once you see low interest rates, you're going to see a lot more competition. You're going to see competition from more buyers taking liquidity out of their CDs and putting it into real estate, and you're going to see more competition from first-time buyers and buyers dependent on mortgages to have the ability to buy more real estate. I also think it will free up some of those sellers who are held right now in level 2, remember our big chart of the buying system, where they're willing now to sell their house because now they're actually going to be able to get a digestible interest rate on their next home and not feel so bad about giving up their low interest rate on their first home that they're in right now. My final point, number 10. new construction. New construction, I actually produced the most successful video for new construction in the month of January in 2024, titled New Construction, The Ugly Truth. And I demystify and I strip down the realities of new construction in South Florida. Again, we have a long history of selling new construction in Miami. And when I say we, I mean the city in general. And it has with it the good and the bad. Without a doubt, there's product out there that I do not like, that I do not think will do well, that I think is dressed pig with lipstick. But at the same time, there are major new projects that are at a level we have never seen before. A new level of luxury product which will do extremely well, setting the stage for Miami for the future. Now, as you go through, you're now seeing some groundbreakings, major groundbreakings across major projects, with new projects being announced, and a continued focus on buyers on new construction. And I predict that the buyers who are looking at that, these aren't dependent or sensitive to interest rates, but they are long on the Miami real estate market of where it will be by the year 2027 to 2030. And that means that the luxury new construction projects will do well. Now, these are just some of the points. We will expand on those through the years. Thank you for watching. Why don't you give me a call? Shoot me an email, because I deal with this every single day. And as we go through the year, whether you're watching this in February or you're watching this in September, it doesn't matter, because we're tracking the metrics every single day. Please use our advanced softwares, use our Condo Geeks tool, which tracks the performance of the condos through their entirety from inception to current day, as well as our market statistics page, which show you each neighborhood, each price point, dollar per square foot, months of inventory, absorption rates, days on the market, all the stuff that you need to know. And our continued podcast, Better Decisions, which is rated the best real estate podcast in Miami. Thank you for watching. See you soon.